Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, November 7th, 2023. The upside continued more aggressively in the NASDAQ today, but I'm going to begin with the S&P, and I'm going to start here on the hour chart. And I've now switched the labeling back, and I am showing my preferred count, which remains that we have completed intermediate wave one. It was a diagonal triangle. I've had many discussions now with subscribers and others that have voiced their concerns and their views. And I want to just say, I appreciate every last one of you who have brought your thoughts and your analysis to the conversation. And that's exactly what I look for. I think this is really a group effort. And I so enjoy the fact that I get a really good group of people that are willing to share what they see or what they think is happening within the market, and are far enough along in their study of Elliott that we're able to discuss, hey, doesn't wave 4 left wave 1? Isn't wave 3 the shortest? Isn't it, the different things that have been picked up? They're excellent. And it's really great to see that there's analysts out there who are really working hard, like we all are. But I believe that I have gone over and I've answered the questions, the exceptions, the things that people were having problems with. And so if you continue to not want to understand, then please just go back and read the comments over the last couple of days, particularly on Sunday's update and yesterday's update. So starting with the S&P, intermediate wave one completing at that, let's see, it was the October 27th low. And we have launched off of that. And that launched actually just continued even today. But here in the S&P, and let me just dive right immediately down to the 1 hour chart, it actually, we finally did get a little bit of a 4, and I probably could put that 4 over here, but I'm going to leave it there and call that a 1, 2, a 3, and we still got a little bit more to go here in the S&P before we're finished with this first 5 up of a minute degree to put in minor wave A. And once minor wave A is in, then I'm going to be looking for a minor B wave intervening decline, right? So because the whole structure for intermediate wave 2 will be a minor ABC. So if we're just finishing wave A, then we're looking to get wave B in. And remember that in a B wave, primarily what we look for, the most common, is a 50% retracement. Second in line would be a 0.618. Now, being that this is a zigzag, so in other words, we have 5 up for A. So A is not an ABC in and of itself. So the whole structure is going to be a zigzag. And so what I mean by that, it's going to be a 5, 3, 5. So it leaves a lot open in terms of where this second wave can go and how it all can fit in. So even if I'm running both counts, folks, which I am, and this was going to be, and with the alternate count, it's also just a B wave, right? Well, or excuse me, an A wave up. And it's if we're looking, that is going to be the second ABC of the primary. So the primary B wave would still be in progress under the alternate count. And so what we've had from the October 2022 low up to that July high was the first ABC. And then coming down to this low was an X wave. So now on an intermediate degree, we're looking for an intermediate ABC. So could this be intermediate wave A of that second ABC? Yeah, it could. It could. I'm counting it as a minor for the intermediate wave 2. But since I'd be looking for an intermediate ABC, the total intermediate ABC structure, to then complete that primary B wave, and it would be an ABC X ABC. So it gets interesting, I know, but we basically have covered the bases, and I laid that out yesterday. So getting back to our preferred. So if I just open this up, let's go back to that 4-hour chart, and we're going to see that what I've left up here are the Fibonacci extensions for that fifth wave. So we haven't quite made it up to 44.21. I believe it got up to 44.12 or 13. Yeah, let me just take a look. I'm not even sure what that high was in the S&P today before they get this thing reopened. 44.03. So we need to kind of pick up the pace just a little bit, because my first take would be that is equality, where that wave 5 is equal to wave 1, and that is at 44.57. Now, granted, my calculation for that first wave may be a little bit different. It could come down here, and it's going to change the whole structure. It's going to change actually how high we'd be expecting this. So I'm going to rely on the structure itself, and I'm counting 1, 2, 3, 4. And so we still have another little fifth within this small, minute fifth wave. Excuse me. And so we have 44.21 and 44.57, but structure may tell us that maybe we only get to 44.10 to 44.12. That's also a possibility. But I do believe we have a little bit more upside before I would expect the minor wave B to begin. So I'm looking for the completion of minor wave A and then the start of the minor B wave. Now, just eyeballing this is that the minor B would likely be expected to come back down to 42.60-ish, 42.59, which is where on the hourly chart, the hourly 200 simple moving average is sitting. And what I have found over my years of doing Elliott and Fibonacci is that quite often on the hourly chart, you're going to get your moving averages are going to come in at levels that are going to coincide with the fibs that you're looking for on the next move. And this would be a B wave. So I'm looking for 50 to 62%. Kind of, that might be the 50% marker. So again, it all seems to work out pretty well. Anyway, and it'll come in an ABC structure. And that could be 5-3-5. So we get 5 down, 3 up, 5 down, call it a B, and then we rally back up in another 5-wave structure. So again, intervening, ABC. Then we're looking for another 5. And again, on this top side, I just need to remove this so we're not going to get ourselves confused, and go back out to my 4-hour chart and put in our retracements now for a wave 2. So we're going to come all the way up here to that July high, and we're going to strike it down to the late October low, and 618.4470. And so that makes sense. If we kind of come down, we come back to, say, 44.25, which is where on the 4-hour chart, the 50 period simple moving average is sitting. And so this would be a good place for that 50% to kind of come down, maybe even 62. And then we put in another rally. So we have 44.70, 45.64. So remember that a second wave can retrace almost all of the first wave. In fact, the classic nature in terms of the classic characteristics and personalities of what I'm seeing via this strength in this buying, this sudden reversal, this absolute have to jump back into the market is very typical of a second wave. So seeing all that gives a little bit of strength to the count and that what we would expect after, because what then comes next would be, again, another sudden reversal that more than likely, as this wave two has been backed by the concept that the Fed is done hiking rates. Now, again, nobody's really said it. In fact, Kashkari was out there today, or has put an article online somewhere through an interview, saying that there's been no decision about, hiking, or that we've reached our inflation target. And so, but that didn't stop them. And so what I really think a lot of today was, that it really came via the NASDAQ. Remember what I've talked about? I've talked that usually the first Monday and Tuesday of a new month, and that's actually today. So it was the 6th and 7th of November, because the 1st of November was last Wednesday. So here we have Monday and Tuesday, and we get that injection of capital that people are from 401ks and IRAs primarily, but also just a lot of that retirement money being put back into the market. Now, I would think that just because the Magnificent Seven again just caught fire, and they were not going to stop, particularly Apple. Apple just kind of started cruising a little bit early, did not really kick into gear, but once it did, we saw this market just kind of cruise. Now, that's also not unusual. Move back into the market. Now everything's going to be okay. And so we now got to get back in and be ready, because the market's just going to rally and rally and rally. Okay. I don't have a problem with talking about it, and I have a problem with accepting it, because it's just the way the markets are. But I do feel that it is an intermediate second wave, and what comes next is an intermediate wave 3, and it'll be in the opposite direction, and it will be very punishing. So again, what I believe is that it will be triggered or by another, either this being made clear that, oh, no, interest rates are still going to go up, or, or there'll be some other event, geopolitical, and it goes on and on and on, that will disrupt the market and drive it back into the direction that it has been going. Now, again, under either count, folks, in my preferred count, it's going to be a much bigger decline. It's going to be a third wave, and it would be taking out that late October low of 41.22, and in my opinion, just keep on going. Now, under the alternate view, it would just be a B wave, but it should be big enough that we likely could come careening back down and get close to that 41.22. Maybe not break it, but get close to it. And actuality, I would not be looking for a B wave to create a new high at this point, but the overall C wave could, but not necessarily the B wave section of it. So it's going to be interesting, and we're going to keep a very close eye. We're going to run them side by side here. But today we're talking about this one, and I believe that we have a little bit more time on the upside, and then that we should be putting in a wave 5, and then we'll put a minor wave A above that, looking for the start of a minor B wave, and then followed by a C wave. Over in the NASDAQ was the one carried it all today. NASDAQ finished up 143 and got dang close to reaching its 618 target. Now, again, here's I believe that what we're really kind of coming through on here is a wave A, minor wave A of intermediate wave 2. So I expect that we're going to come back down. And I think the B wave, because of this intensity of this rally, will also be more intense. So I'd kind of be looking here for about 50 to 62% retracement of what we've done. And just for the conversation, because this could look, don't forget, if I'm coming in here and saying this is 1, 2, 3, 4, yeah, strange 4, but get this as a 4. or even this. I mean, it was all very, very strange. That little pullback could have been the 4. A, B, C down 4, little tiny irregular. If it was that, let me drop down to 15-minute. Let's take a look. We're over here, right? We got this, that, then look at that, ABC, beautiful. So if we put the 3 there, even though that was a kind of like a spike, and then we get an ABC, and that was a 4, and then we get this done. 1, 2, 3, 4, 1, 2, or 1, 2, 3, 4. Then we still have a 5. So similar. Maybe we do reach up to that 15,445 before the market decides to turn and come down in its B wave. So what could we expect? Well, we're going to do it in reverse, right? If it reaches 618 on the reverse side, this would be 14,638. And that's from all the way, if it got there, that's going to be quite the drop. But we can always run a quick marker, and we'll say that it gets all the way up to that. No, I want it up here. It's not going to do it. Well, let's just call it at that high, and we're going to get a fair number. 618, exactly what I said. 14,630, right in there. And then we have the, again, right, the hourly 200 at 14,709, also within the 50 to 62%. B wave. Then we get a C wave, which will likely take us back to this level, above it, but maybe in between, or possibly as high as there. Stick it with an intermediate wave 2, and then we're ready to see what's going to happen after that. So it will be very, very interesting. Now, I am going to take a quick look out here at the daily. And I want to open this up. I want to look at these moving averages. We've got way too much on there. I'm going to remove some of this stuff so that I can look at the moving averages. So again, we're above everything now. And this, remember yesterday we kind of closed right on it. It got above it, came back, gave it a test, didn't work, and shot up. I just went. Now, that is what one would expect after breaking on the daily chart. A bigger moving average, and then again broke the 100 and closed above it. Now this could get a little bit more and then decide it's going to come and start breaking back below. And again, we're looking for 14,700 down into here, like right at this level. Or here would be another one. But we're going to get a pullback. It has been an intense run up. Excuse me. It's been an intense run up. So again, moving averages are doing okay. You can see these are kind of going flat. Even the 20 is going flat. Kind of interesting on a daily. That type of push, they're going flat. If we continued, then we're going to see them start to rise. Then we're going to see the 20 go above the 50 and then above the 100, etc., and line up for upside. If it's going to occur, I think it's going to be limited, but this is kind of telling you we might be running out of steam. And now we're going to get a B wave. All right, that's where I'm going to complete it. Complete it. No sense in going to greater detail around the block. Just a quick update. The treasuries really held a support line that they needed to and put in a decent rally today, moved back above that in the 30-year bond, that 114, and in the 10-year note, I'd have to go take a look to see how high it got, but they were good. They were decent moves. They held the support line cleanly, which keeps a more bullish picture for the treasuries in place. Okay, next update will be on Wednesday, November the 8th.